In August, the trade dispute between the US and China still dominated the markets. Currently, the trade dispute is not only unresolved, but has recently intensified and slows down the global economy through spillover effects. President Trump announced to increase the existing punitive tariffs on Chinese imports and in addition to impose special charges. Beijing reacted promptly with new punitive tariffs on American imports that have not yet been impacted. As a result, almost all trade goods between the two economies are now subject to tariffs. However, we consider it more alarming that China's central bank recently devalued the yuan against the dollar to its lowest level since 2008. This raises fears that the trade dispute between China and the US could escalate into a currency war. The significant currency devaluation could have been the first step in this direction. Once again, global trade would suffer the most. What does this mean for the positioning of the Ethna-AKTIV? We are not likely to see a resolution to the trade conflict anytime soon. Therefore, the Ethna-AKTIV's core portfolio still consists to around 80% of high-quality corporate bonds. A bigger part of these bonds are denominated in US dollars. With this allocation, we were able to generate a performance contribution of approximately 8% year-to-date, primarily due to the significant decline in interest rates, particularly in the US. Thanks to other performance drivers, such as gold, currencies, and derivatives, the Ethna-AKTIV's total performance since the beginning of the year is currently above 9%, with comparatively low volatility. Regarding interest rates, there's little hope for a sustained trend reversal towards rising yields. However, an easing in the bond markets both in the US and Europe seems overdue. This is why we recently reduced the duration of the bond portfolio somewhat and have realized profits as a result. In terms of currency, we believe that the US dollar will remain strong against the euro. As most European bonds have negative interest rates and market participants are looking for positive yields, especially in the dollar area, this should continue to support the US dollar. In addition, we hold a position in Swiss francs that will benefit from the current economic and political issues. We are also retaining our gold position as it is currently benefiting from negative real interest rates. As we are currently cautious about equities, we have limited exposure to this asset class. Should the trade dispute ease, we will again increase our equity exposure.